do that. All right, welcome everybody to CRInvestor and TheChasm's Power Option Show for, what day is it today? It is Monday. Must be options day. Every Monday is options day around here. April 28th, 2014. It's now just about 5 o'clock Pacific time. We'll be on for the next hour or two, depending on how active people are asking questions and all those kind of fun things. Welcome everybody out in internet land to the show. And good to see we've got a couple people in the lounge today. I understand that these option shows are sometimes a little bit slow on Mondays. It's tough to get people to stick around. By the time we get up into Fibber and Low Pro shows later in the week, people are much more attentive. But anyway, here we are. It's Monday afternoon, and I have the great privilege today to have Jesse in the audience with us and Osteen. So hello, gentlemen. I think Osteen is just on text, so he's typing a hello. But hello, Jesse. How are you today?
Oh, sorry, I had to click on you. I'm great.
Okay, good to hear from you. Good to hear. By all means, any questions whatsoever, type them up in the lounge. I'll see if I can get to them. Love to have your feedback and participation, so great to have you on board. Thank you very much for participating. Getting on to the show, these shows, like I said, sometimes they take a few minutes to get up to speed. Where are we here? So usually what I like to do is take the first half hour or so just to talk a little bit about what's happening in the news and in the broader market. Then, once 5:30ish rolls around, we'll actually get into some of the option plays that I have either are currently on or I'm considering. Joe, my partner, he messaged me that he was running a little bit late, so he'll pop in whenever he gets back onto the home base. And hopefully before 6:30ish, we'll hear from him. He was actually showing me a very interesting chart the other day, so hopefully we'll get him to post that chart and give some explanation. I thought it was really interesting analysis of volume and how that plays into the equation. And I'm personally dying to hear how this plug power trade went for him. It was his first covered call strategy play, and unfortunately I think the stock came down quite a bit, but we'll see how he managed the trade and how he's faring. Other than that, that's basically the show. Once we're done our presentations, we'll open up the floor to questions and answers. I will pop in every now and then into the trading view room just to see whether there's any further requests to join the lounge or get a YouTube address as well. I'll pop over to the YouTube page so you'll see me jumping around, and I see that we have a few viewers. If I happen to oh, there we go. If I happen to talk about anything in particular with regard to publications or any links or anything, I'll try and pop them in the comments section. I noticed, though, that it's kind of tricky to use this stuff. You have to sort of be a pro at this, but anyway, I'm sort of fumbling my way through it. And hopefully, the bottom line to all of these endeavors is that you do actually get some value out of the information that you've been given. It looks like my screen share died there, so good thing I checked that. All right, we'll pop over there. And really, that's the bottom line to all of this, is that I've been doing this game now for the better part of 20 years. I definitely know that there are certain ways that you can sort of identify opportunities, and the great part about options is you don't need a lot of money to be able to participate in very big markets. And one trade that we'll look at in particular, the underlying itself is $50,000-$60,000. And we detailed a way that you could participate by spending a grand total of $500. And it turns out that trade actually is working quite nicely right now, but we'll get to that in a bit. So that's sort of the summary of our show. As I said, we're in this first sort of introductory time here, so I'm not really stressed about time. What I'm more concerned about is just people sort of getting comfortable. I see that people are slowly pouring in to both the YouTube channel and our lounge. Hello, Tim. I don't know whether you have a mic, but a hearty hello to you, and welcome to the lounge. If you have any questions, feel free to type them in, and I'll see if I can address them. Then we'll get into a review of the option trading strategies that I like to do. We'll do a little time with Joe if he can turn up, and a couple things I'd like to pick his brain about, and then we'll finish off with a question and answer period. So, I'll start off. Like I said, I always like to look at the broader market and just see if there's anything in particular that it's trying to tell us. So I'm going to just quickly pull up our S&P 500 chart, and let's try and put all of this into perspective. I personally really like the S&P 500 because it's a nice simple proxy of the world stock markets. It's the 500 biggest, most liquid companies in the world. So obviously, whichever way the S&P 500 goes, odds are that's probably the way the broader economy is moving. You can always go to, I suppose I should take a minute or two and give a plug to the page here. I wrote this website called therationalinvestor.ca. And it's funny because I'm a 70s, 80s kid, and somebody who looked at the site said, well, it looks like the site was written back in the 1980s. So I wrote all of the code myself. It, I suppose, looks rather amateur, but there is just a ton of information on it. So if you want to, by all means, feel free to dig around. Most of the stuff is free on the site. You can also learn a little bit about me, who I am. I also have an About Me page where you can learn a little bit about my family and sort of what our goals and aspirations are here and over the short term. I was also suggested that I just make the simple statement that we're in this. Yes, this show is for free, and the information is for free. If you did find value in the presented material, then you're encouraged to sort of return the favor with a donation. All you need to do on the front page of the website is just click on the donate button, and theoretically, if everything's working correctly, the link address should pop up. Oh, that's always a good sign. Let's see if we can try that again. There it is. And that takes you to the wallet, and away you go. So thank you very much in advance if you do decide to make a donation. And hopefully, the bottom line of this show is that you actually get some good value out of the information given. All right, so a little bit about me, and as you sort of can discern here, I've worked in various parts of the brokerage industry off and on for the past, like I said, better part of 20 years. I've done almost every job there is to do in the stock market, except the only job I never had was as a floor trader or a runner, which is kind of sucks. But by time now, actually the whole concept of the floor is itself evaporating. So, but having said that, I've worked in both retail and operations. Both behind the wall and in front of the wall. If you know what that means, you'll know. Then I'll know that you're a industry professional. I got my start in technical analysis. Maybe 25 years ago, learning double tops and double bottom pattern formations. And actually, I think I have something I can show you here. Zip, zip, zip. Where are we here? Setups. All right, hopefully you can see, and let's just make sure we got the screen share going. Yep, looks like it's going. I learned about 20 years ago the four first charts that you see. M tops and W bottoms, and the concept of the 50% rule. I learned that like 25 years ago from commodity traders. So the interesting part about this is that they didn't invent this system. The 50% rule, that's created by a gentleman by the name of William Gahn. And you're more than welcome to look into Gahn analysis and all the wonderful work that he did. But basically, the 50% rule is a very, very handy little tool if you're a trader. And the double tops and double bottoms, you could argue they're called Dow tops and Dow bottoms, because he was the one who basically, over 100 years ago now, was the first one to actually track the price movement of individual stocks on a daily basis. That was the founding of the Wall Street Journal. And he actually was the first sort of major participant here in North America to plot the prices of these assets on a daily basis. And this is sort of something that jumped out at him. And it's a very basic principle. You'll find that throughout my analysis, I constantly make reference to M's and W's. It's sort of my primary trend identification tool when it comes to simple price analysis. And I would do yourself a favor, if you want to learn more about this, you can go the long route, I suppose, and try and figure out information on your own, or you can go over to my seminars page and click on this course that I wrote for continuing education programs on how to invest. And it basically is a nice little introduction on how capital markets work and how you build an investment plan to actually trade for success. It's fascinating because every time I go on this this document, I see a whole bunch of people are on here. So it is free, and you can see there are people out in internet land who are taking advantage of this information. And I would recommend anybody out there take advantage of it, because it won't be free forever. It's just sitting there. As soon as we have plans of turning all of this sort of 1980s website that I created into more of a 2014 website, and at that point we're probably going to start charging for a lot of this information. But that's coming down the road. So if you have the opportunity, take advantage of what this website has to offer right now. Now, where was I? I got off topic there a little bit. All right, the M's and W's. And if we limit our trend analysis to just this simple principle, and then we add in simple harmonics, and harmonics is something that I've learned over years and years and years, and that is that price very rarely goes from point A to point D. It usually has a pit stop halfway between. And the pattern often looks like this, what you see on the screen right now, this AB equals CD pattern. So if we apply simple harmonics plus the concepts of Mr. Gahn and the concepts of Mr. Dow, then we actually can come up with a half-decent trading model. And so that's where the basis of a lot of these options trades comes from. And what I'm going to primarily be talking about tonight is every week I do a commodity trend survey. And in essence, you can go to the Trading Forum page and just click on Most Recent Weekly Commodity Trend Survey, or WCTS. And every week I go through all of the major commodity markets that I follow, and basically this is basically the world's asset basket. All of the major currency pairs versus the U.S. dollar, the U.S. yield curve, the stock markets of the world, the three major U.S. markets, Canada, Great Britain, Germany, Japan, and Australia. The metals markets, gold, silver, copper, platinum, palladium. The energies markets. Now, because I'm a proprietary day trader in crude, I follow the energies markets obviously a little bit more closely. So on this weekly commodity trend service, I include the daily and monthly crude charts, just so I'm always on the right side of the market when I'm picking my bias. the softs markets, and actually we had a recent setup here in the softs, and we'll get to that later. The grain markets, and the meat markets. So basically, this is the world sort of breadbasket, if you will. All of the major assets that we set our lives to are basically contained on this one page. And as you can see, I basically identify is the trend up or down. And really, again, that's just going back to Mr. Dow bottoms and Dow tops. Just keep it simple, stupid, nice and simple. When did that trend start? How many weeks old has it been? What is that signal? In essence, Dow, where were we here? A Dow bottom is obviously a buying signal, right? And if we look at this in particular, the Dow bottom buy signal is off of the middle part of the W, and your stop is at the lows. What that price was, where it came in, what the corresponding stop should be, what the target is, and usually in the comment field I sort of figure, I come up with the targets based on, like I said, either Mr. Gann's 50% rule or the harmonic patterns, bullish or bearish ABCD patterns. Now, we as Joe Six-Pack investors, like this crude oil contract, that's 1,000 barrels at $101 a barrel. I just picked a number here. That's $100,000 asset, and keep in mind that if you do a futures contract trade, then that is an open obligation on that $100,000 contract. So, if you shorted crude oil and all of a sudden a nuclear bomb goes off somewhere and crude oil spikes $100 higher and it gaps, it doesn't even trade, it just gaps $100 higher, guess what? You're on the hook for $100,000. Excuse me, you're on the hook for $100,000, basically the difference between the current market price and what price you shorted the futures contract at. That is the number one reason why I like options, and that is that an option in itself, it's by definition, an option is a insurance policy. And just like an insurance policy on your house or an insurance policy on your car, all it is a piece of paper, and whoever wrote the piece of paper, they have an open-ended obligation. The person who buys the piece of paper, however, their maximum risk is the purchase price of the piece of paper. So let's say you had maybe $10,000 to work with. You can actually come up, and of course, have you taken my course? And we'll pop that up again. If you'd taken the course, then you'd understand that professional portfolio management, we really never want to risk more than 5% of your stake on any one single investment idea. Well, then you come to me and you say, well, Brian, I love your signals, but buying a $100,000 crude oil contract, there's no way I can meet your 2 rules of investing. Well, here's another added feature of the options market, is you can literally level the amount of money that you're going to risk on a trade. So if you say, if you follow CRI's 2 rules of investing, and I'm not going to risk more than 5% of my money on any one trade, and I got $10,000 to work with, well, that means that I could literally go and buy a $500 option, and if it goes to 0, well, so be it. I met CRI's 2nd rule of investing. I didn't risk more than 5% of my stake on any one trade. As I said just a moment ago, an open futures contract, or even just going out and buying stock in something or shorting stock in something, that involves a substantial amount of risk capital, usually far beyond the threshold of someone who's dealing with only like $10,000-$20,000. So 2 really, really neat features of options. And I suppose if you'd like some further information, on those models. As I said, we're building out a website here. I just got to find it here. Bear with me here a second. We're building out a website that's going to be quite professional, and basically that is what I've just talked about is this, actually it's not this model, I beg your pardon, it's this model. This is the weekly commodity trends options model strategy, and what I just talked about is this model. In essence, this presentation, and you're more than welcome to go look at it at your leisure. It summarizes the service quite nicely. I can just pop it into the lounge here so you guys have it, and then I'll throw it over on the YouTube page just so they have it. I've tried to do this before and it sometimes doesn't work, so just bear with me here. Okay, alright, so let's see what happens. Boom! Alright, there it is. And the long and short of all this, like I said just a moment ago, is the model itself. If you approach trading big basket of assets with options, you number one, you limit your risk, because like we said, the worst case scenario is that the option that you buy expires worthless. Unlike a futures contract or short open position, there's no open-ended liability. So that's really, really key when it comes to the attractiveness of options. At the same time, it has unlimited earnings potential. If you had unfortunately, Bitcoin doesn't have them, but I've seen talk of options trying to be listed on Bitcoins, but there's lots and lots of stocks that have gone to the moon. I mean, Tesla Motors Companies is a great example, where you could have bought a call option when the stock was very low, and it takes off, and literally that option can become extremely valuable. And then the last part about it, like I said, so finite risk, unlimited earnings potential, and the great part about options is that because of rule number 2, we always have to be mindful of the amount of risk that we're taking, and when you consider an options trade, a purchase, you can actually define the exact risk you're willing to take, and so you can actually incorporate that into sort of professional portfolio management a lot easier. So some real advantages of using options. All right, so let's go back just for a moment here, and maybe I'll open this in a new window. So what's been happening in the world? Anything really exciting? I update this basically every week, and as I said in my commentary this past weekend, we're all sort of sitting here with bated breath over what's going to happen with this Russia-Ukraine situation. I find it very interesting that there will be those in the media that will use an event like this to justify the notion of the stock market correcting. And I would actually argue that, and I've drawn this vertical line on the S&P 500, that we're actually starting to head into a very normal seasonal correction window. If you read my S&P 500 blog, basically this is my commentary on the broader U.S. stock market. You'll constantly hear me making reference to the seasonality of the market, sell in May and walk away. You've probably heard me talk about that before. But whether you come to the market from a purely stock perspective, or whether you come to the market from a commodity perspective, which is actually where that adage got its start, the long and short of it here is this is a fairly dangerous time of year for you to be getting super bullish of the stock market. And I would argue to a lesser degree, just assets in general. So, I made the commentary here. We might use the Russia situation as our reason to correct, but, the fact that we're into this precarious seasonal window, really my attitude is I wouldn't be surprised whatsoever to see a break to the downside here. Stocks are quite overextended. The yield curve, in my opinion, the long bond looks like it's trying to rally. And the European currencies look a little toppy. So put it all together, and really I'm not one to be a big purchaser of anything right now. I would personally just like to get through this seasonal window. Once we're into sort of the second or third week of June, we probably washed out a lot of the weak hands that bought through the early part of the new year. And we can start setting our base for the next leg higher. If we look at this is S&P 500 on the daily chart, and a lot of technicians like the 200 periods simple moving average, and you'll notice that the 200 period SMA seems to be sitting right into our sort of OTE, or the optimal trade entry window here. So, we're actually starting to build the technical case for why the market should come down, and, roughly about where it should come down to. We do still have this bullish momentum divergence on the dailies to work itself out, and I don't really see Willie, stupidly overbought like it was back here, nor stupidly oversold. We're just sort of sitting middle of the road. And let's just take a quick view. Hold on a second here. What are we going to do? Boom. There we go. Take a look quickly at the money flow. It looks like we have a little bit of a top here of late, and you can see as prices of equities were bid up, basically the buying interest sort of dried up here. Is this an outright sell signal yet? I think that the jury's still out. And I'm certainly not, pounding the table to short the market. But, I think we ought to just keep everything in perspective. In my commentary here on the weekly commodity trend survey, look how old these trends are. I mean, the Dow's trend is 93 weeks old. The Nasdaq's is 87. The S&P's is 88. Canada, ironically enough, trying to play catch-up, is 35 weeks. Great Britain's bull market is 69 weeks old. Germany's is 72 weeks old. And what I found really interesting over the past couple weeks is that the one market that sort of led us out of the bottom is actually starting to break down. And so if you look at Japan, they were the market that started this bull run a year or two ago. Right? I mean, you can see it on the charts. It's as plain as day, and hopefully you guys can see my screen share. Yep. I mean, you can see this double bottom. Beautiful. You heard me talk a few minutes ago about M's and W's. That's about as well-defined a W as you're going to get. And then, you got another bigger W off of the breakout here. Having said that, look at what we start having happen now. This market is no longer making new highs. In fact, it's starting to make lower highs and lower lows. So the fact that the market that led us on our last bull run is actually breaking down and it's heading lower, it leads me to believe that these guys here might have to start playing catch up to Japan pretty soon. So, and really, again, we look at the S&Ps, we see the market structure. This is not healthy. We're making new highs, then new lows. So, you could argue that we have a megaphone that's forming here. Megaphones are notoriously dangerous and love to just eat retail customers alive. But basically, I would argue there's our trading range there. So we could, here's our seasonal window. I put this vertical line here. This is my birthday, and markets love to top out right around my birthday. So it's a nice simple line in the sand that I can draw that should give me a pretty good indication. I mean, do we ever go and take this high out here at 189.70? We may not, and we may roll over and ultimately work our way down to the OTE. And people will say, Brian, the market didn't top out on your birthday, it topped out in April this year, so you're full of horse hooey. The point here is that this is the seasonal window to be looking for correction. So, does it top out exactly on my birthday? Nah, I think I've maybe seen that once or twice in 20 years. But odds are that we're heading into the window where we should be looking for a top in equity markets, not a bottom. All right. So I'll be watching the weekly CTS to see targets and short entry levels. And if I happen to see one, as I said before, this model, the weekly commodity trend service options model, one of its basic tenets is the primary objective of the strategy is to book doubles. Ideally, if I'm wanting to go out into the market and risk my money, I want to know that I'm going to double my money, or I'm not even interested in taking the trade. Now, once the market doubles, you can either sell half of your position to create a risk-free trade, or you can or you can exit the entire position and just take your money and run. Really, I don't care about that. The point is that we only consider option transactions if we can realistically look for a double. So the model itself just basically says, I'm going to be looking for 6 to 12 months options, and I love leaps. My favorite option is a leap, and that just comes from stock market days. These trades are only considered when the intrinsic value of the option, and the intrinsic value is simply the strike price minus the current market price of the option, right? So if you bought a call option and your strike price was $10 and the current market price of the underlying is $20, then your option has intrinsic value of $10. Hopefully you understand that. So trades are only considered where the intrinsic value of the option at our anticipated target price would be at least twice what we're considering spending on the option. All right? Very important tenet to all of my option transactions. Keep in mind that options are tough to trade. They're difficult. And the market will goad you into paying a higher premium. The key for success here is that you have to be meticulous in understanding that you will only consider doing the trade if the intrinsic value, that's the strike price of the option that you're buying, minus whatever the price is when it hits your ultimate target, is twice what you're considering spending on the option. All right. So with all that said, we look at the Japanese market, and thanks to Mr. Gunn, we can come up with a pretty realistic 50% level target. So Mr. Gunn suggests that a 50% level is 12,300 and change. So that's basically right around here, and that kind of makes sense, right? The problem here is that when you go and look at the options, the premiums are for the put options, because this market has just come straight down. The premiums are pretty high. In fact, they're so high that if I looked at something like a 13,000 put, the premium would not be half of what the option would be worth if the market goes to our 12,300 target. So as a result, I can't justify doing an options trade. Having said that, if we got a nice rally up top here and then put in another M top, right, or let's say around 15,000, 16,000, you just never know in the market, then it might be considerable. But as it stands now, the Nikkei is moving down, it is trending down, but it's not a candidate for the options trade because the option premiums are just too expensive right now. So hopefully that should explain why I'm not getting super excited about buying put options on the stock indexes right now, because you have to be quite specific about, if you're going to think about doing a trade, what kind of money you're going to spend. Let's see, is Joe in the house yet? No, Joe. Where the heck is Joe? Oh, he's 45 minutes late. Tisk. Anyway. Okay, so if we're not going to do something in stock market land or currency land or, gold and silver land and energy land, where is something that we might do? And a market that's really caught my attention of late, and Joe and I have talked quite a bit about this, is I'm quite interested in the cotton market. Excuse me. So if we go to our weekly commodity trend survey and we scroll down, we see that cotton right now is trending up. And the trend is 5 weeks old. You should be long from 93.90 with your stop at 73.79. Now that's a monstrous amount of risk. Basically 20 ticks, where every point in cotton, I think it's $5 a point. So it's basically like $4,000 or $5,000 a contract. Probably more than that. 20 points, $5? No, it's much more than that. 10,000 bucks. So, taking a futures trade off this just makes absolutely no sense whatsoever. Having said that, we look at this chart, and let's scroll out a little bit so you can see the bigger picture. You can see that back in 2011, cotton prices were many times higher than what they are right now. In fact, almost 3 times higher. And you can see these sort of W patterns that are forming on the price charts. We're not making M's, we're making W's here. So, seeing this dramatic swing from over $200 down to under, 80, 70 and change, thanks to Mr. Gann and our beloved 50% rule. Let's see if I can find it here. There's one page open like 5 times. All right, thanks to Mr. Gann, and that's this chart, we know that markets like to retrace 50% of their previous move. So all we do is we take the high, we add it to the low, and we divide by 2. In this case, it comes to 6. And sure enough, the market came back here for my example. If we apply that same logic to the cotton market, we get a chart that looks something like this. All right, so when I look at this, I see this massive W here, right? I mean, basically, this looks like this, right? Massive W. Problem is, it's so big that buying a futures contract and risking down to these lows just doesn't make sense. It's just way too much risk. So how could you play this? You could always throw your stink bid in down low here right against these lows and risk this much on the trade, and that's fine. That's one strategy. I personally find that I like to go with the breakouts. I am a trend follower by nature. And so what we found when we got this breakout, and this often happens in the options marketplace, is people didn't really believe this breakout was for real on the first push-up, right? So, as a trend follower, higher highs and higher lows are a bull market. So we get this push-up here through 93.90, and that's a big bullish signal for me. But what's really interesting is on the day that this happened, if you pulled up the option prices, the 95-cent call option for December 2014. Remember, I like to buy, 6 to 12 months at a time. So here we are in April. Basically a December option sort of meets that window. I could have went and bought that option for $1.05. Now you can see, and so what is $1.05? $5 a point basically comes out to about 550 bucks. What that means is that if price is above this dotted line at expiry, whatever price is higher than this dotted line, that's intrinsic value. The option will have that intrinsic value. If the option never goes back above this dotted line, then the option will never have any intrinsic value. Of course, at present, it's got a whole bunch of time value and volatility premium, but that's fine for me because when I look at this chart, you know, and I just do some very simple fib analysis, you know, the 50% level, Mr. Gann, he suggests that the price probably wants to go to about $1.45. I personally am a big fan of this 38.2 fib, or what I like to call my first stop target. And really on this trade, I think that that's a realistic expectation. We might get the rally to 50% level or even up into the OTE zone. This is actually where institutions will be shorting this thing up top here. You know, but maybe that doesn't come till next spring or next summer. We, you know, keep in mind we've got a December trade, so you know we're concerned about time here. The bottom line here, right, is that we paid a point for this option. So technically, anything above 96, and we're at break even on the price of this commodity. If it's 97, then this option will have $2 of intrinsic value. That's a 200% gain. If, and really I don't see this as too big of an issue, but if we do get a rally up into this 38.2 through any time between now and December, this option will have an intrinsic value of $15,000. That, in my opinion, is a very good risk to reward ratio. And it's something that I think is in almost everybody's best interest. Now, I'm not saying it's going to go to that level tomorrow, but let's say we start to slowly work our way up. You know, you could always sell half of this option at a double, like we said, the 2 points, and see where this thing goes. They're only 500 bucks a piece. You could throw $1,000 at this thing and ride 2, let one go at a double, and then just ride the other one, see where it takes you. Or, you know, in our very simple analysis, we say that, you know, using a $10,000 account, we're not going to risk more than 5% of our equity on any one trade. You could go buy one of these options for 500 bucks and just throw it in the account and see what happens. What I find fascinating is that when this first dotted line was the day the trade set up, and I went and got the price quote, $1.05. What I find fascinating is that, you know, even since that rally, and actually you'll notice that prices actually have backed off here. There's like 3 down days. And we've only now started to rally again. This is a weekly chart. So this is, you know, we had a week of indecision. Now we're starting this week on a bullish note. Let's go see what our option prices are now. Where do I have that? Oof. And we'll go boof. And we'll go December 2014. We'll click on calls. And we'll go down to the 95-cent call. That 95-cent call now is $1.28, and it was actually down a nickel on the day. So, you know, just even, and this is the kick in the pants with the commodities markets, is the price of the asset is actually just about the same level as where we first initially got the signal at $1.05. And yet for some silly reason, the actual option is like, what, 10-20% higher in price. And why? Well, simply because the market now, and keep in mind, options trade on sentiment. right? So all through this period, the market was fairly bearish. And this breakout, this double bottom breakout here, and the fact that the option premiums are moving up is music to my ears, because what it means is that the market now believes that its sort of underlying fundamentals is now turning to the bullish case. So you get a bit of a kick in, a little bit of a kicker in that sentiment itself will help your option trade purchase. So the point here, and if you look at the rest of the, cotton is basically it's basically another grain. We don't eat it, but farmers have a choice. Am I going to plant, especially down in the southern states, am I going to plant corn or am I going to plant cotton? That's basically what their choice is. So quite often cotton prices, even though it's part of the foods and fibers, it often moves in conjunction with the grains. And what I see, like if we just look at soybeans themselves are rallying off the bottom. If we look at corn itself, I think corn right now is at a major pivot point. Corn could take off here like a rocket. And you look at others like oats. Oats is actually in a bull market. It already has taken off like a rocket, and it's just backed up here a bit. So put it all together, and frankly, I don't see really that big of an issue being long cotton in here. I like this trade, and the fact that the market is actually giving us a premium on these 95 calls so ahead of time, ahead of our purchase price, leads me to believe that we're definitely thinking in the right direction here. So that's something that we've got on the books. Really like this trade setup, and if it works the way I think it could work, this could turn into just a monstrously profitable trade. And it's in a market nobody's talking about. So that in itself is quite interesting to me. All right, it's about 6 o'clock now, so I've been yammering away here for probably about a half an hour or 45 minutes. I suppose we never know from week to week whether Joe's going to turn up. So we'll just sort of take it one day at a time. If he doesn't show up, then so be it. That's just the way it goes. If he does, then great. Thought I'd take some time right now. After I've done that sort of summary, I'll just quickly check in with the group. How we doing, lounge members? You guys feeling good? And I think Jesse stepped away, so Tim and Osteen are here. How you doing, Osteen? You still with me? All right, you're listening. Sounds good. How about you, Tim? You with me here, Tim? And surfing. All right. Okay, let's see where we are. Let's go over to YouTube, see how they're doing. YouTubers, hey, I'm getting a PM from Joe. Let's see what he has to say here. What's up? So we'll have to see where Joe is. I'm in the middle of Hoboken, and I can't play today. Who knows? Anyway, he's typing away. Not much, just sitting here. What? You planning on being part of the show today? All right, well, we'll see what he has to say. Whoops, I heard a bleep go off. Something, that means something. Oh, that's probably this Google thing. Let's see what it says. Yeah, when is the show till? Well, for another hour. You guys are watching me converse with my co-host here. In fact, why don't we say hello to the community. In fact, I'll even type in here, you are on YouTube live as we speak. I don't know how to spell speak. Two Ks? As we talk. I'm a terrible speller. All right, let's see where we are. Okay, let's take some time now and just review some of the recent recent setups. So we talked a little bit about cotton. Ooh, sounds like telephone's ringing. I'll have to get that later. And let's take a look at maybe our Brazilian ideas. Brazilian ideas are fun. What does this say here? Hello world, you look very nice tonight. All right, well, so Joe says hello to everybody. So, hello, Joe. All right, I'm just gonna last message. Keep our fingers crossed you make it today. And that's about all we can do, eh, folks? All right. All right, so I thought we'd take a few minutes now. We talked about the WDB. I beg your pardon. We talked about the weekly commodity trend service and how that sort of operates. And so we can put away the double bottoms and double tops for now, and that's that. Why don't we take some time now and talk a little bit about some recent WDB option trades. So this is, we're going to change gears now. And we're going to talk a little bit about writing options. So last strategy we talked about was all about being long options. Now, as I said, we're going to talk about being short options. All right, and you know, you're more than welcome. Anybody who's watching out in YouTube land, let's actually, I haven't checked in. Let's see how we're doing here. Oh, it looks like it's pretty quiet. Nobody really here. Oh, no big deal. I'll just put the website address in this chat so that if you did want to go to it, you can see it. All right, and we're going to talk a little bit about writing options. So keep in mind, we talked a little bit of, weekly commodity trend service all about being long options. Now we're going to talk a little bit about being short options. And the WD options model was specifically designed to take advantage of investor sentiment in that put options, in essence, are an excellent proxy for market fear. And good sort of working example for that is we can look at the put-call ratio on any of the major indexes. So, you know, we'll just pull up a really simple, clean daily chart. And we'll just type in here, I think it's put-call, something like that. What does it say here? Total put-call ratio, CPC. All right, so we'll put in our box, paste, update. All right, and let's see if we can zoom this out as far as we can. Probably can get a pretty good, chart off of TradingView. So let's see what they have. Put call. What did these guys call it? CPC, CBOE options total put call ratio. Never figure out the darn symbols for these things. CBOE put call ratio. That doesn't come in. I hate when you don't have a symbol guide. How are you supposed to figure this stuff out? Ay, caramba. I should have this handy. Anybody in the lounge know what the put-call ratio symbol is on TradingView? Do. Well, bear with me here. I'll figure it out. Let's see. Does that come up? Oh, here we go. VIX. You're in here somewhere. Probably looking at it and going right over top of it. Somebody just sent a message. What do we got here? Is that you guys? No. Must have been Joe on the Google. Let's see what Joe's saying. When do we start? Keep our fingers crossed. I need a link. Actually, maybe Joe can pop into the. What do we do there? All right. Well, just so I don't stall here and put you all to sleep. Well, we'll give it one more try. CBOE. Holding. Corn volatility. Don't want that. Let's go. Soybeans. Where is the put call ratio? Where are you? See, Joe's sending lots of texts. Where is the put call ratio? Isn't that a shame? All right. Well, give me a project to work on for next week. All right. Just so I don't mean to get off topic here, but anyway, long and short of it here, when the stock market is most euphoric, the put premiums will be very low. And when the stock market is most pessimistic, the put premiums will be very high. The ratio, this is actually total number of calls and total number of puts traded. So whenever you get a situation where people are buying up puts, buy puts, buy puts, buy puts, buy puts, and they're doing that over the amount of calls that are written, keep in mind that a lot of calls are written as covered calls, and they're actually a pretty systematic and regular event, as well as regular put purchases for insurance purposes, like in portfolio insurance, are regular purchases. So on a daily balance, there's usually a little bit more interest in calls than there are in puts. And keep in mind that retail investors write almost no put options at all. So as a result, by definition, there's usually a bit of a premium to the calls, i.e. this ratio is below 100. And when you see this ratio go above 100, it means that there's quite a bit of interest in puts, and as a contrarian indicator, it's a wonderful tool to sort of call market panic bottoms. So if we understand that retail investors will bid puts up at market bottoms, because keep in mind the public always buys at the top and sells at the bottom, then by definition, if we see abnormal behavior in put options, then that in itself is a bit of a contrarian tell. And so that was sort of the reason why we came up with the WDB model, in that there are times when put premiums get bid up so much, just based out of fear, that the premium itself is so high, it can actually cover the margin requirement to hold the stock in your account. And in this situation, you want to get exercised. You want to write the inflated put. You want to collect that inflated premium, and you want to just sit on the long position of your stock and wait for it to come back to what we perceive as fair value. So the model itself is constantly hunting for deeply discounted stocks. In this example in particular, Actually, let's go back to the front page. And this is a very typical report. This was from March 2nd, 2013, about a year ago. And the stocks that met the fundamental criteria were scanned, and then of those stocks that were scanned at super, super discount fundamental prices, were there any situations where the market was going to give you a premium to go ahead and write the put option over what it costs to just carry the stock on margin? And as you can see on this particular day, this DSX, if you had written this $11 put, it would have given you about a 10% premium over current market, over the margin requirement to carry the stock. This IRDM, same thing. This PWRD, that was a better part of 12%. Frankly, those aren't really exciting numbers, and this is on here just as illustration purposes. I get really excited, and basically this report is sent to me every day. But, like I'll go over to my mail and I'll show you. Let's see if I even have this open. I might not, but no biggie. Oh, there we go. Zub, zub, zub. Let's go down to WDB. Boom. And we'll go to the latest options report. And
I'm here, by the way.
hey, is that Joe?
Yeah,
The man, the myth, the legend, he's here.
I actually been waiting. I thought the show hadn't started.
Oh, you knucklehead.
Yeah, I feel it's waiting. I just never got a link. I had to add you on Twitter to find it.
Oh, yeah, well, it's a good idea to follow me, because all the feeds go out that way. I apologize if I didn't do a very good job at making. I thought I sent you messages on TradingView and stuff.
I didn't get a link though.
Oh, that sucks. Anyway, you made it.
Yeah, no
So,
problem.
and actually, this is good because it's only 6 o'clock, so we got lots of time to bug the heck out of you.
Okay.
So everybody say hello to Joe. Joe, say hello to everybody. We got a few people in the lounge today. Couple of regulars, couple new faces. I'm not quite sure what is happening over on YouTube. I think it's pretty quiet tonight. But having said that, we usually get people that watch this thing over time. So great to have you on board. Good to see you again. Nice to hear your voice. I'm just going through the latter part of my presentation. I'll probably just maybe throw up one or two examples, and then the stage will be yours, okay?
Okay.
All right, so just to sort of finish off this WDB, the screen results here spat up some very compelling fundamental stories. At any point you can just click on these symbols, you get this report in your email. This is a stock in particular that's jumped out at me lately, this AKG, Asanko Gold, trading at 0.77 times book value, so it's trading below book. It's trading at 2 times cash. Basically, they have $1 in cash on the books. Its quick ratio, or what they call the acid test, is trading at 41 times. Basically, the quick ratio measures what their short-term liabilities are versus their assets. And basically, the company has no debt and a whole shitload of cash. In my opinion, this is not a bad place to be thinking about putting your money to work. And lo and behold, the public is now going to give you a 200% premium over what it costs to carry the stock on margin on the $5. It's a $5 strike price. So that means that if we write this option, we can collect $3.10 on it. Let's see what the current market is right now. $2.75 to $3.20, so lots of room for you to get a fill in there. Option premium, last trade 310. That's why I came up here $5. The margin requirement, if you get exercised on this $5 strike, is going to be 30% of that $5 or $1.50. You're going to collect $3.10. So that's literally twice what the margin requirement is on the stock. I think this is such a compelling idea that I went and wrote up a recommendation on it. So, very similar to the cotton option trade that I did that write-up on. You can go through my Twitter feed and you can find the AKG, which I just did here recently. And, very similar to the cotton write-up. Basically, I just do a nice simple summary of what the trade looks like, why I think it's interesting, and what the strategy is. Long and short of it here, I mean, these fundamentals are compelling. 41 times quick ratio, that's nuts. I mean, basically, they could sit there and twiddle their thumbs for the next 10 years, and they're not spending any money, and they got a whole bunch of cash on the books. So I love that. I mean, the irony of it all is that they're basically valuing their properties and their assets at nothing, right? I mean, basically, the current market value is less than what the book value of the asset is. So very similar to our cotton trade, here's that 38.2 fib, and it's sitting at $4.61. Keep in mind that if we write the $5 put and we collect $3.10, then our cash cost for owning the stock is $1.90. All right, so here's a situation where we can sell half of our position at double our purchase price and get ourselves into a risk-free trade on this setup. You're more than welcome to go and pull down this chart. I'll throw this out in the lounge. Anybody wants to look at it? And the interesting thing is that because basically our margin requirement to carry the stock is $1.50, we've got a world of playground right here, right? I mean, the stock right now is $2.06. So basically, we've got almost 60 cents of wiggle room before it even gets to the point where we're underwater on the margin trade. I mean, very, very comfortable position. Keep in mind, it's trading at a huge discount to book, and they've got a lot of cash on the books. If the market goes back to 461, then that basically is a triple from our margin requirement, and it's a little bit more than a double on the straight cash cost. My attitude is, if you do get that rally, you do get the pop, you sell half at double, and then literally just put the rest of the stock away and forget about it. I wouldn't even think about the rest of it. I would just keep scaling out half every time the stock doubled. So, at $3.80, what's the next double? That would be $7.60, right? And gee whiz, that's right up into the OTE. So if we get filled on this, then out goes another half up in this $7.60. So then at this point, you're sitting on only a quarter of the original position, and you've already taken out 2 original investments out of the trade. So very interesting, good fundamental story, cheap stock in my opinion, and a way where you can actually get the market to pay you to take the trade. In my opinion, I think that's fantastic. I think I'll finish today with just a quick review. I wouldn't mind just taking a quick boo at how our Brazilian plays are doing. I like the GFA, and now that Joe's here, he can talk a little bit about how his long trade is working. The GFA came up on the WDB screen about a year ago, so we've been in this position quite a while. But same sort of thing. Fantastic fundamentals, trading half a book value, trading less than cash on the books, and they're actually earning money. The model recommended the July 2013 $5 puts. This was at $2.53, just an enormous premium to do the trade. Basically, you can see that, indeed this was fundamental value on the stock. The stock basically technically bottomed in here. We've jumped up, we've rallied up into resistance, and now we're just sort of going sideways. The long and short of it here, obviously this option trade is well over, and you are actually long the stock. The cash cost of ownership on this stock right now is $2.47. So sitting here even at $3, we're still sitting on a 20% gain And same thing as the others, 38.2 fib right here on this guy is at $8.25. So from our cash cost of $247, you know me, I'm going to want you to sell half on a double at $5, and just keep scaling out as the stock keeps going higher and higher. The interesting thing here is, believe it or not, $15 down the road is not out of the question. That actually is, believe it or not, a perfectly realistic target in my opinion. And the irony of it all is that if it ever did get up to $13, $14, that is where the institutions will be shorting the stock right off of the original top up here. Be interesting to see. Joe took a little different strategy. He just went and bought the 6-month call options. Not quite sure how that's worked out. Are you working an offer on that, Joe?
I'll show you right here. If you can see my screen, I'll show you what I got.
All right, let's see where you are. Boom.
So the September 14th $5 strike price, I paid 5 cents for it. It's the last traded for 10 cents. So it still has a long way to go, but I got it for so cheap that it really wasn't that expensive to own this thing.
Cool. So, and
So,
the offer there's 15. So it just goes to show, and you see the next strike. If this thing pops at all, he's laughing. I mean, the 2.5s are 65 to $1, right? So,
yeah,
and I think that's sort of the strategy you're looking for. Is you're looking for the poppers, eh?
exactly. I don't necessarily need to get $5 out of or $6 out of this thing. If I get a pop to $4, I sell my calls, which I bought for 5 cents, for 15, 20, 30 cents even. That's a nice handsome profit. I don't care, who I sell it to, whether it goes to 5 or not.
Yeah. No, that and you can talk a little bit about that strategy too, because I like that as a nice speculative strategy. You're in the market to speculate, so if you speculate, you want to get paid, right? I like your perspective on that.
And
The,
depending on what I'd see, selling, because I have more than one contract, so if I get that pop, I don't necessarily have to get rid of everything, depending on what I see. Because if we do go up to that $8, like you were showing on the fib line, that would be a nice handsome profit on 5 cents if I could get $8
that'd
on
be like my
5 cents.
cotton trade.
Yeah.
You know,
What is that? 60 times my investment?
yeah,
That'd be nice.
you might. This is just my 2 cents as an old broker. If you do get a pop, it might be an idea to just roll the free position out into a later expiry date, just to buy yourself more time.
Hmm.
So that's something to consider. But that's just me as a broker talking. All right, so that basically summarizes my thoughts on the options market. I'm just in summary, I'm concerned that we're getting near the end of the long seasonal window for the stock market. The weekly commodity trend survey is starting to get concerned. That these equity markets have been trending for an awfully long time. Can they go on for a few more weeks? Sure, that's totally not out of the question. But we are getting awfully long in the tooth, so I'm going to be watching for any stock option setups going forward. Right now, the only thing I'm really jazzed about from the weekly commodity trend survey is I do like that cotton trade.
I don't think it's supposed to be here. What doesn't allow me to have it?
You just muted Brian.
Where's
You got muted by someone, Ryan. We can't hear you if you're talking, Brian. Someone muted you.
Somebody did it back to me, eh? I bet you Julian did that just to for revenge. Anyway, I'm just playing. Um,
I guess someone did it by accident.
all right, no big deal. I'm just no big deal. Anyway, so the point is that We've looked at a couple existing trading ideas. We've looked at a brand new trading idea in the options market this week. So giving you some stuff to chew on from an options perspective. And now I think I'm going to turn the helm over to Joe. And Joe, I was telling everybody that you were showing me a really cool chart. Um, I guess it was yesterday or the day before, so I'd really love if you had that chart handy to show it and try and explain your thinking there. I want to know how the plug power trade went, and I want to hear what other things are cooking for you.
Okay, so yeah, I remember we talked about this trade right here, where I wrote my first call option. Do you
Yeah, and
remember this one?
I'm just gonna put myself on mute. So basically, I'm listening to you now.
Okay, so this is something I tried. I usually do the call side, um, where I buy calls and I look for stocks to shoot up. I tried something a little different here. This is the first time I've done this. I actually wrote a call option. What I did is back on April 1st, I purchased plug for $6.99, and I purchased 100 shares, just enough to write a call option, and it's a covered call because I have the shares. So there's no risk of the stock going to like 100 and I end up owing somebody a ton of money. So I wrote a covered call for that. Now I wrote and sold a covered call for 11, so it was only 11 days that it expired right here on this line, and I sold it for 39 cents to somebody. So what ended up happening is 11 days later, it expired, but it expired worthless. So I collected my 39-cent premium, and I still had my 100 shares. And I ended up selling two and making about 20 or 30 cents too. So it worked out. It wasn't a big trade, but I tried something new here. It ended up working out, and it's something that I'm going to look at in the future. Now,
So that's cool. You turned a profit on the trade?
yeah, I collected the premium because if you see right here this candle, it closed below $8, so it was worthless. I collected the 39 cents,
That's
and then
cool.
I ended up selling it either this day or the next day and made 30 cents on
On the
I bought
stock?
it at I bought it at 6.99 and I sold it at about I think 7.30.
Oh, that's good because I was looking at plug here, and I don't know whether you saw on my Twitter feed, but there's some guy that was touting. Where is it here? Uh, this guy here. I mean, I don't know who he is, but anyway, he was saying, "Holy moly, it looks like Plug Power looks just like." And all I did was just I don't know who this guy is. Anyway, he was saying it looks like this thing looks just like Bitcoin, and I was thinking, oh no, is Joe still in this thing?
Oh, because it's crashing?
I guess. I mean,
Oh yeah, I took I didn't overstay my welcome here.
oh, that's good. Good. Phew. So
It was
I was
starting to
worried
go
for you.
it was starting to go sideways and all that was happening, and this baby just jumped up. So I actually made a chart yesterday on plug. So this is a daily, I believe, or maybe this is a weekly. So this is what plug has done. If you guys don't know, it started the beginning of the year, right before the beginning of the year, it popped. But before then, it was only at about 50 cents. And within 6 months, it jumped to $11. So it's been really exciting. The reason for that is they're an alternative energy company, and they just hook up with Walmart and a few other big guys, and just having that name and a contract with them creates a lot of excitement. And if you go and look at FinViz, this company is worth like $40 million, but its market cap is over $1 billion. It's ridiculously overpriced according to its books. This is all hype. But the funny thing about stocks like this is it could trade 100, 200 times its book value for a whole year because people are just excited. And I actually think that will happen with plug, which is why I'm still interested. And I made this chart yesterday. What I'm expecting is this little trend line right here is not going to hold. We're not going to get another wave up right now. I think it's going to trickle down. And,
Sorry.
and but I'd still like to own this stock, pure speculation. Though one thing that this trades on the Nasdaq, and I haven't been looking at the overall market that much, but I have noticed that, like you were saying, Brian, how much longer is this thing going to run? And I'm starting to see some signs that it could be over. Maybe we'll get one more, but to me, it's starting to
Yeah.
look really scary, especially the Nasdaq,
Yeah.
and that concerns me about owning technology companies because technology companies don't do well in bear markets. They never have, and they never will.
Yeah.
Um,
This is a very risky market. There's no doubt
but
about it.
let's
There's
put
got
that
lots of
for
risk in it.
But let's put that for aside for a second, because I haven't been looking at the overall market too much, but it is on my mind. But let's pretend that we'll continue in a bull market for a while. Where I'd be interested in plug is down in this 282 area, and
Right, but like try and keep in mind that these typical seasonal corrections,
mhm.
well, they usually only last about a month, month and a half. So, I mean, basically, it's what it looks to me is like your little plug's gonna go down. It's gonna plug the gap there over the next month and a half.
Yeah, and
No
you
pun
see
intended.
your 786 fib. You see that 257 you have on your screen?
Well, yeah, I just quickly pulled this up. Yeah, I mean, when
Yeah,
I
I use those levels, and you see the resistance back in 2012 at that area at that level too.
yeah, I mean, it sure looks to me like
That's why I'm
somewhere in
interested
there,
at
right?
this level. Yeah, that's why I'm interested at that level.
Yeah.
Under $3, I'd be interested in owning the stock again if, all other conditions are telling me, hey, this could run again.
Yep. And as a technician, what jumps out at me is the gap. I mean, this is
Mhm.
a big, ugly hole that needs to be filled in. So, question is, how is the market going to do it? Um, if they happen to use this seasonal weakness to do that, uh, that would just be par for the course. Wouldn't surprise me one bit. Um, yeah, that's about all I would say on that. So maybe even just have stink bids working. The problem with options, of course, right, is we just don't know what these premiums are going to be like when it gets down there.
Yeah.
But I would, what I could very realistically see happen just on this guy in alone is a move down into here, right? This low, right? Test this low, and then a rally back up to here, and there's your head and shoulders pattern. So you see this high here?
Hmm.
This high will probably be our next high, something like that. And then to sort of further validate that, you'd say, right, well, what would be an OTE if it is going to bottom off of these lows? What's a realistic level? So that head and shoulders there would be a 50% retracement. We might even, like those that in the stock market community would probably be looking for a rally into here, into late summer to sell into. So.
Now, do you think a fib off that wick at $12 is too optimistic? Because that's where I'm drawing my fib from for a retracement, a bounce back up of how
Yeah,
high
I
we
don't
can
like
go.
this. See this nasty double top here? So, whoever's in control of this thing, you see how it came down, rallied up, then came down, then up, and then broke? There's a brick wall right here. And
Yeah.
it's also this high too. You see that high there? Somebody does not want this thing really up here. I think it did this by, and keep in mind this is a weekly, right? So if we blow up the daily, see what that looks like. It's really messy, I know. Sorry. Jeez. Um, yeah. So well, see. Okay, so we have three highs here. One, two, three, plus this one. Plus this was the bottom. Remember we were talking that day? This was a Friday, wasn't it? And it closed really strong that day, right?
Hmm.
And I remember we were talking that day, and I said, I bet you this thing gaps open the next day, which was the
Yeah, and
following Monday.
I had already taken profit.
Yeah, and it
I
did.
missed the double.
Okay, yeah, 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 yeah. I
That
remember
was the day when I was just like, oh man, I missed out on a lot.
that. I think you sold right in here or something.
Yeah, I
Yeah.
was holding what's cool too is I was holding a $6 call option since $3.
Mm.
So if I held that thing to 12, I would have made a shit ton.
You
I
know
made
what
a
we
good
call
amount.
that? We say woulda, coulda, shoulda.
Yeah, exactly. I was still happy. I ended up making a very good amount, but it was just funny to watch this thing, go. And
Yeah.
when I'm sitting there on the sidelines, I'm like, oh man,
Well,
that was
and so,
risky.
like I'm a very mechanical trader. And
That's
the
when you
reason,
know what? Hold on. That's what really got me thinking about your sell half thing,
yeah,
because
yeah.
I would have definitely benefited from selling half in this
Well, and
situation.
yeah, the irony of it all, right, is that you would have sold half, and then you probably would have sold half again. Um, so you might even still be sitting on some, but by selling another half up top, you got basically what you would have gotten from selling the whole thing down here.
Hmm.
But anyway, that's yeah. I mean, hindsight's always 2020, right? So don't beat yourself up. Important thing is, I hope is that you followed your trading plan. You just sort of you had realistic expectations and you took profits.
Well, my expectation was this thing's I'm gonna watch it retire worthless, and then
Yeah,
because
that's
I had a March 14th
yeah,
that expired, and we're sitting at the end of February, and I'm like, yeah, this thing's not gonna break $4. And then
yeah.
all of a
So
sudden,
you know what
they're like, hey,
happens,
Walmart, and then
right?
the thing shot
So
to 12.
um, what that says to me, right, is, and trust me, I do it all the time too. I'm certainly not like I'm not immune. Is actual human emotion took over versus calculated thinking. And I mean, it's good that you took nice juicy profits and all that, right? And trust me, it happens to me too. So it's not like I'm sitting here saying it doesn't happen to me. It happens to me all the time. Is that you actually end up shooting yourself in the foot in that way? But anyway, congrats on making money, and I'm actually glad that you made money on the call right because I was worried about you there. And
Yeah.
just something that jumped out at me when I looked at this is these two trend line here to me seem significant. This trend line here, tag that low, and here we are fighting at that low right now. If it loses this trend line, the next realistic trend line that I can draw is down here.
Hmm.
That's that 250 area, right? But these are gaps. This is gaps, right? So this is dangerous. You're playing with fire here. I wouldn't just go and throw blind bids in. That to me would be very dangerous.
Well, what I'd like to do is actually, even though you're saying it might only go to $8, I'm looking at the options, and I'm seeing the $10 options for November 14th are trading for 38 cents right now. They just dropped 27 cents because plug dropped 13% today. What I would consider doing is, because I like to own a lot of different names and buy them as cheap as possible, is throw in a bid at this $10 call of November 14th for 5, 10 cents, And if there's ever a really big panic day over the next month, someone may give them to me for 5 cents.
Yeah, that's not a bad idea. Keep in mind, though, the farther options get out of the money, the less volatile they'll be, right? I mean, they'll go down and they'll just trade off of time value.
Hmm.
That's that whole delta principle. So we probably should just do a show one day just on deltas. Um, yeah, so and that's I love your. So you'd be willing to bid a nickel on those? Is that what you're saying?
Absolutely, because what happens is it's in November, so I got
I think
what's
it would
that,
be better.
6 months on that. Let's
I
say
think it would
that
be
we
better
have a
to go after this $8 one, if there is one. I don't even know if there is or not. I think it's realistic that you see this trend line, right? They
mhm.
can rally it back to this trend line, so that's that $8. Getting back above 10 would literally, because you said there's a November option.
Yeah, but hold on a sec though. If I'm gonna buy an $8, I'm gonna be paying 2, 3 times as much for it.
Well, no, but again, your stink bid strategy. But a
Yeah, I
nickel,
mean,
that
if I
might
could
be,
get a nickel for 8, obviously I'd take it
yeah.
over 10.
Well,
But
that's just the thing, right? Is I've often seen, and let's just go see what those options are trading at. Um, where's the best place to go?
it's on my screen right now.
Okay. Um,
This is the November 14th calls.
yeah, I really don't like that day two, right? Because that's right around a usual seasonal bottom. There's the $8 calls. What are they worth?
60 cents.
40 to 50? 40 to 55? And your tens are 25 to 45? So the offer difference is only a dime? I would say look at the open interest in those eights, right?
Hmm.
That's where everybody's got the action. So I mean, I don't know if you'll get them down offered at a nickel. I doubt it. But
Well,
you know,
remember, yeah, and remember too, um, I'm looking at this as a guy that has 20 positions where 10 of them are going to be crap.
yeah,
So I don't want to pay a lot of money. I'd rather pay less money, have something even further out of the money on my call, and have a bunch of them. I'd rather have two really shitty out of the money options than one that might work out. That's just the way I end up diversifying my risk just
yeah,
for myself. So
yeah,
that's why I'm interested in the 10, even though it might not make it to the 10.
yeah. No, that makes sense. All right. So we've plugged plug into the ground.
Yeah.
It'd be interesting to see. I mean, me personally, I really couldn't justify thinking about playing this to the long side, so I really want to see how this plays out for you.
Okay.
I
I'm
mean,
on the
it's
sidelines right
it's
now.
you're not buying right now, right? Is that what you said?
Absolutely not. I'm on the sidelines. I
Yeah.
sold back up at
Yeah. I see. I
11.
think it's gonna test this low right here. What's that low? $2.21. So right now it's 460. So it's still gonna fall in half from here. So I honestly think you could see a nickel on that $8 option.
Hmm.
Those people are gonna be really pissed off.
Oh yeah,
Anyway,
it's
only
still
time will tell.
this thing is still being promoted by a guy I follow too, like real hard. So
Yeah, I agree. But if we have a big sort of
well,
punch in the nose
that's
in
what I
this
mean. A
stock,
lot of people are going to be upset when this thing fails.
yeah. Well, and that's an interest. It'd be interesting to see what their average cost is. You know, I mean, if
Probably
you
this big green candle right here,
let me see.
between $5 and $8.
Your
All that
big
buying.
green panel. Well, I think they've been flushed out. Sad part about it, right, is somebody wanted to get short, right? And so they, like Uh, did that big bar happen on the down bar or the up bar? Yeah, it happened on the down bar on my chart. Wow. So it opened up here, it gapped open again, and they said, "You want stock? Merry Christmas." And all those stink bids, they all got flushed out. So I'm looking at, are we looking at the same thing? Maybe we're not. What was
I
that chart you just had on there?
I have a weekly.
Oh, that's a weekly.
Yeah,
Ah, okay.
that's why.
All right. Yeah, all right, cool. Any new ideas?
Just plug for
Stink bid?
for. I
What were
did a
some other things? We were kicking around some ideas
I did
before,
a
weren't we?
not it doesn't have anything to do with stocks, but I did a Bitcoin trade, my first Bitcoin trade in a while.
Did ya?
Yeah, ended up working out.
Buying or selling?
I shorted.
Oh, good. So do you trade on an exchange where you can short it?
Yeah, I use MetaTrader 4 through BTCE. Been using that.
Oh
So
yeah, this is the chart that I wanted you to
yeah,
explain. All
yeah,
right,
yeah.
so
You've already seen
I'm
this.
just gonna go on mute, and what I would love is start when the market was at the top, right? Um, when it made those highs on the left-hand part of your screen.
These.
Yeah. So um, maybe center the chart around. Can you move those charts around? Maybe you can't. But anyway,
Yeah, I can.
what
Yeah,
I would love is start at the top of that chart that you just had up, and walk us through your thinking. Like, what were your indicators telling you? And as the price action developed, what different messages were you being sent,
yeah.
and
That's
what
that's
prompted
exactly
you to
what I'll do.
act?
That's what exactly I'll do right now. Okay. So first, let's zoom out. Everybody knows we've been making lower lows and lower highs. So the trend is still down. And that said, whatever the trend is going, if it's going down, I like to be shorting, and if the trend is going up, I like to be buying. So the first thing is I say I'd like to short. Now, where would I like to short? So we just had this leg up here. Let me make it a little bigger. Don't need this stuff. Okay. So we just had down, 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 bottom. We had this move up here. And this looks really familiar to me. We've had this a lot back here too. We seem to make a bottom. We have a shoot up and then we just bleed down. And I remember a lot of your charts, Brian, your Fibonacci lines had worked out very well for a lot of levels. So considering that, what I did was I'm seeing I use this a 41.8 cross, which I learned from Beauty, and I made it so that I get a red when the trend is bearish and I get a green when it's bullish. So I got it here.
Those are just two moving averages?
Yeah, they're two EMAs.
Okay.
And I changed the colors so that they turn red and green for me. So back here, when we had our bottom, one wave up, trend turned green here, topped out, and then it's been bleeding, and I'm like, oh, I know what's happening here. It's starting to bleed. And then right here, I got the tread single for sell. Okay, so that's the first thing I look for usually is okay, which way is the price heading? Now, I saw that first. Well, I'm going to go off and just read everything that I saw here because I actually outlined everything I was seeing. So it's been a while, but I'm going to try out a trade on Bitcoin. That idea is lower lows and the 841 EMA cross down signifies a bearish trend. 3 red candles have already brought us down $50. That's right here. And a little retracement is expected before another leg down will follow. My short areas were made from, so I always make lines from areas where I think price could have support and resistance, which is I just take them from previous areas. And I believe I used a Fibonacci. I'm going to draw one. From the bottom here up to here. And I saw that the optimal area, which you talked about long, is a little bit lower. And I saw it on your chart too, Brian. You were talking about the 400 area. So I was thinking the trend's still bearish here. We could definitely get another leg down, but we just had 3 big candles down. We have 2 wicks at 430. This could turn around a little bit. So next what I did was I said, where would I like to get interested in shorting this? And I drew a fib the other direction now, off of the top of this wick down to here. And that gave me, or maybe I drew it from, where did I draw it from? Maybe I drew it from here. I don't know where I draw it from. Oh, this is the chart now. That's why I'm being confused. I'll go back to this one. So I drew it from here, and I ended up getting retracement areas which I saw would be good, would be a 452 and a 473. So I knew there would be a little bit of retracement looking at my indicators. So instead of shorting right here, even though I think we could get down to 410, I put my first order in at 452. And how I end up doing my orders is I average them. So I put in, let's say, 452 short 1 Bitcoin. And then I'll just keep that order in there, and then I'll set up another order in case we go a little bit higher. And I saw my second short area at 473. And what I do, I trade like this all the time, is I double the volume. So I would put in a short at 473 for 2 Bitcoins. And what that does is if my first short area wasn't correct, I now get a next short area. And what it does is it gives me an average price of 466. And you can keep, this is a little bit of a risky strategy, but it's called averaging up. And you keep shorting as the price goes up to get a better average price. And now, obviously, you can see the problem with that is if you end up being wrong, then you can lose a lot more. But because I was pretty confident that we still have some area down, I like to do it like this. And what ended up happening is I got my first short area, so I got the 452. My order went through, and we ended up getting another leg down here. It didn't get quite down to 410, but I actually did take profit at 416 last night. I was looking at my chart, and I saw it as a good area to take profit, so I ended up taking profit at 416. So it ended up being a pretty good trade.
Way to go!
Yeah, so I'm happy that to come back. You know, I had an idea, ended up working out. What ended up happening for me with Bitcoin is I was doing very, very well in the first few months, like really, really well, like better than I should have been doing, you know, because I was nailing everything. And then all of a sudden, all my predictions started to become very bad. So when that happened, I just took a break. And you know, I would make a chart once in a while, and it ended up not working out. So I've taken a break from Bitcoin for probably a good month or two. And so this was kind of my first trade back where I calmed down, relaxed a little bit, kind of get back to my roots, and I'm glad to see it worked out. So I'll be making some more trades. Definitely.
Good for you. Good for you. I like to hear that. Nothing breeds success like success stories.
And I documented everything I did. If you guys have any questions about it, I just put, for you guys that are in the channel right now, I just put it in chat. And I tracked everything I did. So if you have any questions about it or how I average my positions, I was talking to some people down here. I got my 452 went through, and then I took profit 19 hours ago at 416.
Good for you.
And I didn't go for my 410. I just I tend to be a guy a little bit different than Brian, where Brian sticks to rules that he has before the trade. I give myself a little bit of leeway, and which can be dangerous, but I like to make decisions as I see the price play out,
Yeah.
which isn't necessarily the best strategy for everybody, but it works out for me a lot of the time.
So Jesse's asking, do you look for specific signals for calculating an entry?
Do I look for specific for calculating an entry? Well, I do for deciding to enter. When you know there's a larger trend move. The Yeah, I've tried a lot of different things recently. I've been bouncing around, but a few months ago, I was trading just one way where I was trading with the trend, and that's when I was very, very successful. Is I don't try and be too smart, which is what I realized I was doing last month. I was trying to predict things that weren't there, and really, you just go with the trends, and if the trend's down and we just had a nice little move upwards, like I was talking about here, where we had a nice big move upwards, but we didn't get a higher high, we got a lower high. To me, that says it's still bearish. We got a nice move upwards that gives us a lot of room to move down. And I'm on the heel end of this. We don't know where the price will go if we're gonna make another lower low. But
Was
I
the
still saw.
was the 450 short level, was that like a fib or something?
Hmm.
Or
Yeah, yeah.
was it
It,
that previous low?
I believe I made a fib off of this thing right here. Just this candle, this green candle right here, down to there. And I
Yeah.
had the area from this support right here too.
Yeah, I like that strategy. I mean, because I could see where, let's see, what is that? It's BTCE. Let's see if I can recreate that.
Yeah, I try BTC because it's what I trade. I know people have been telling me it's not as popular anymore though.
It's funny, it's literally like a flavor of the week.
Oh, okay. Because yeah,
You
people were
know?
giving me crap about posting
Yeah.
BTC charts. They're like, it doesn't mean anything, and I'm like, oh, well, okay, but
Well,
what I trade.
for me, it was a big incentive, seeing what's going on in Eastern Europe, and I didn't want to have anything to do with Eastern Europe. So that was the incentive for me. Um, okay, so, and all I've done is just pulled up a clean price chart. I don't know, can you see my screen?
Yep.
I'll pop it over there. Um, and so I'm just wondering out loud what this to this was. Is that the level you're talking about? So you wanted
Um,
to do your first short here off of that low. That's 452. Is that where you said you shorted?
you pulled it from 500 down to 430.
Should be 498 even. Anyway,
Yeah, yeah, I
that's
think that's what it was. I saw the fib at 456, but then because I had the wicks over there, I think I picked 452.
yeah.
So I moved the fib around, and you know what's funny though is if you look at my uh, trade here, the fib was actually perfect at like 457, I think the price hit. So my line was actually a little bit lower. The fib was actually correct.
Yeah,
So I could have
so
got another couple dollars out of it, which I think is funny how good fibs are sometimes.
it's kind of sick. Yeah, so that's interesting because my interpretation of this, and this is kind of looks like your plug, right? Is and I can see why the guy says this looks like plug, right? So your plug, remember that top was $8, right? So this guy's plug $8 top is 504. Almost, this is a carbon copy. So I can see why he says that these charts look very similar. Hmm. Fascinating. So, what I also see here, which really interests me, is this is one of my silly bot trades. So the bot would go like this. It's so hard to get these numbers exactly right. Something like that, whatever. So check this out. So the bot would want to go short 441, and look where his target is. 391. That's interesting. That jumps out at me. I don't know. Can you guys see that?
Mm-hmm.
Anyway,
So
that's
you're drawing. How are you using that fib for?
all this is it's just really simple. It's a oops, actually that's not what I wanted to do. So simple, I screwed it up. What do I want? I want this one. A to B is C.
Okay.
Right, it's this high here. C to D. All the way down here. Isn't that incredible? That's not rocket science. That's just that simple harmonics. And the fact that you put in this really well-defined top here. Huh. So, isn't that interesting, eh? And what's interesting is if you look at the plug, see, there's that same sort of brick wall, eh? Right up in here. So, the same logic here is what? How does this work? I guess. That's a tough one. I mean, is it this? Is this realistic? There to there? There to there? Wow. Where's that going? Whoa, check this out. Look at that. Right down to take out this low. That's what I drew earlier. Hey?
Well, $2.
Isn't that interesting, eh?
$2.
So that's basically the same logic. Actually, if we do Bitcoin on the same scale, let's see what that creates. Oh, how high is this high? Way up there. 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 Woo! Try that again. There to there. That's interesting. So for me on Bitcoin, I clearly have a target window right in here. And actually, if you look at this, right, this is a classic continuation pattern. See if I can do it right. I don't know. No, that's not right. How do I do that? This is a zigzag. I don't know how to do it on TradingView, but it goes like how do you do it? There, there, oops, there to there to there to there to there, something like that. So you see how this is a zigzag pattern in here? This is very dangerous. I think there still needs to be one more leg lower. Anyway, we'll see what happens. All right, we got a bit off topic there. But what the hell?
So I want to
Oh,
talk to
you still
Jesse
got more
about
to
something.
say?
Yeah, because Jesse's asking me about and he's saying some kind of 1, 2, 3, 4, 5, 6, 7, 8, 9 thing, which I don't really know.
Yeah, I don't know what that is. On the
I
price area, the light blue, 1, 2, 3, 4, 6 in a box, as the calling the low. I was
well,
just wondering if that one is well known.
this is how this is how I think about my trading a little bit. Um, I actually like to think about this shows in my portfolio about how I have tons of those out of the money options positions. I think about probabilities, and I don't necessarily need to win. I kind of trade like a poker player. And what I mean by that is if I have, a 10% chance of winning, then I'm only going to bet 10% of the pot. And if I have a 50% chance of winning, I'll bet, whatever amount of the pot it is. And what I do is, if I'm looking at this, down, 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 the trend's down. The way I look at it is every time we make a leg up, like one of these guys right here, I see it as every time we have one of those, there's a certain percent chance that that's the top because we're in a downtrend. Now, the first leg up, it's a low probability. So if it's a low probability, I'm only going to bet a low amount. So maybe I'll bet 5% short. This is the top. Okay, it wasn't the top. We have another leg up. Now, this is the second leg up in a bear market. The probability of it being the top becomes greater. That's the way I look at it. So now maybe I'm willing to bet 10% of my portfolio on this trade. And what happens is now I have an average price of somewhere in the middle. And then we ended up having another leg up. Now, third leg up, we're starting to get a lot of legs up in a bear market. And we're getting kind of into this area too. But just thinking about it on probability alone, 3 legs up in a bear market, this being the top is it's starting to get a pretty decent chance. So maybe I'll bet 20% here. And if I bet 20% here, that'll bring my average short price up to probably, 520, 5 whatever. And then that ended up being the last leg up. I just hold on to it. And, I could have covered anywhere down here. And because every time we have a leg up, I bet more than the last time, my average position actually gets up pretty high. And even though I started shorting maybe at 436 and then shorted at 463 and then shorted at 500 area, my average price would probably be around 470, 475 because I keep doubling my bet or whatever it is. And what ends up happening if you do it like that is once in a while you only get one leg up and then it'll go down and you will take your profits, but you're only going to take your profits on 5%. So you don't make a lot of money. But you'll oftentimes get these other legs up if you're going to bet like I do, and it ends up paying off. And instead of betting everything and being wrong and risk all this heat in here or taking a stop loss, because I'm actually not a big fan of stop losses. And I'll use them once in a while, but I actually would rather average my trades up than to actually use a stop loss. I trade a lot differently than the other people in TradingView, I've noticed.
I like your strategy.
It's more about making a lot of little orders, and it's basically betting the direction of the market and just using probability and volume of bets to put money on my side, where it's okay if I lose these first shorts because I have such big shorts up here that they pay off. A lot of my winning trades over the last few months, I've lost I've lost a lot of trades, but my winning trades were really big trades, and it ends up averaging out to profit.
Well, and that's the whole key is you want to try and make your average winner bigger than your average loser.
Yeah, this is not about winning a lot, it's about winning more when you win. Just
Yeah.
like in poker. I think of it like a poker player.
That's smart. I like that strategy. And
And
really,
and that's
it also relieves you a lot of burden when you see the trade go against you the first time, because you're like, well, I want it to go higher because I want to short more.
Exactly. It's funny. It's funny that you say that, Brian, because I'll sit there where everybody's like, "Oh, I just shorted here. Like, I don't want it to go up. I don't want to go up." I'm almost saying I want it to go up because I have such little skin in the game. I kind of want to be wrong.
Yeah, no, I like that idea. And
And
then
what
if
ends up
it turns
happening
out
is
you're right, well then, well, I guess you got to make money. So what?
I have a very clear head when I do that too because I'm never under pressure.
Yeah, well, and again, it probably removes a lot of the emotion from the game.
Yeah, and then I actually look at the charts more clearly and make better decisions.
Yeah, I like that. And the interesting thing too, right, is I find that a lot of times when you do the first, like, like let's say you want to build a short position, right? A lot of times when you do the first stab at it, you look back in hindsight and go, wow, I was way too early.
Yeah.
And I was just, the guys last night, they all basically picked bottoms on the Bitcoin the last cycle, just before this last dump. And they were 100% all in. But I might argue that your strategy of, yeah, okay, I'll buy a little bit last night, and then if it comes down some more, I'll buy some more. And if it comes down some more, I'll buy some more. You would
Exactly.
actually, you would have been filled on your second lot here, and you'd still be rooting for prices to go down more to get your third lot on, right?
Exactly.
And
Exactly.
yet, if it does, because my hunch is that they got the retail community to think bottom last night, and then today was just a nice fuck you move. That's my hunch here. So there might be one more wave lower, and I got a kind of feeling that they're just really trying to wash the retail customer out here. But the long and short of it here is that strategy just basically plays into your hands, and that's basically what a good poker player does, right? Is they set people up to play right into their hands.
Yeah. And one of the reasons why I've taken this approach is because, Brian, you're always talking about the game is rigged versus us. I always knew that. I always knew that, like, all the media, everything in trading, it's all rigged against me. So what I do is I don't play their game. I don't play the normal trading thing. I came up with my own kind of, like I say, this is reality. This is the way the trading world works. So instead of trying to play their game, trying to pick the bottoms, the tops, use the indicators and everything, I know they're doing it way better than I am. So why don't I just recognize the field and approach it in a completely different way? So I kind of looked at it
Yeah,
more.
and the purpose of these shows is to demonstrate to the public that there's more than one way to skin a cat. Some people will just, be only long only of this, and keep in mind, most of the retail public, like 80% of retail, they will only buy things. They never think of shorting anything. And heaven forbid, they have absolutely no interest in options. We're going
Yeah,
to try and change that, right? But what you're saying, just those words, it's actually, I know a lot of quant guys that would want to talk to a guy like you know because that's exactly
what's
the kind
quant?
of strategies. Huh?
What's quant?
Quantitative analysts, it's sort of a
Okay.
separate way of trading the market based on
Yeah, quantity
sentiment.
versus quality.
Well, there's a whole bunch of things. The textbook definition, I love it. It's the how does it go? It's the stochastic of calculus, or the calculus of stochastic, one of the two. It's one way or the other. If you can understand what I just said there, then you want to talk, then you're a quant person. But oh, that's interesting. Looks like we got the family on board here. Anyway, um,
My
but
favorite way that I've ever traded is actually I'll sit there because I used to stare at the beginning of the year when the price was really going crazy. I would sit there for hours and scalp everything. And my favorite way to trade is actually to not even use a chart and indicators. I would look at the order book. I would watch Bitcoin Wisdom. I just kind of like feel it. And I would look at the candles and I'd look at the volume and the orders. And what I would do is every time I saw a potential top, I would sell or I would short. And I would base all my volume on, again, my rule that I just covered about, every time it goes higher, you bet more. But what I would do is every single time I'd see a potential top, I'd sell or I'd short. And every time I saw a potential bottom, I would buy or I would buy to cover. And what I would do is I would have literally hundreds of orders on my client, and I would just be buying and selling them every 5 to 10 minutes. And I would use averaging my positions, where I would have, like I was saying, I'd have maybe 50, 60% losers, but all my winners were 2 to 3 times bigger than my losers that I would just pay out, and then at the end of the day, I would have a nice profit.
Well, you should write a book.
Yeah, I'll if price ever gets exciting enough again where I can sit there and trade the 5 minute, I'd love to do that again, and I'll write down what I do.
Okay.
But I
And it
actually
sounds like
I've had fights
Jesse.
with people about this. People say you can't beat bots, right? And I say, well, actually you can, because bots can only do what they're programmed to do. And yes, they have. You can kind of teach them. We're getting really smart. We can give them some fluid intelligence. But what bots don't have is that humans have is emotional intelligence. Your intuition. And I've actually learned how to use my intuition with trading, just because I've done it a lot. And I actually see a lot of value in my intuition that a chart or price could never show me.
Okay. All right, Chief. Well, we've gone about 15 minutes over today, so I think we better call it quits soon, or YouTube's gonna yank our license or something.
Okay.
But we might as well just take a. You know what I'll do for those that are in the lounge, and this might be a encouragement for those out on YouTube watching. If you do want to continue the discussion, usually we leave these chat rooms open after the official program has ended, and we just chit chat away about all sorts of different markets. So you're more than welcome to pop in. You can find the Google Hangout address on the Twitter feed if you subscribe to my Twitter feed or go to my web page or anything along those lines. I guess I'll thank you right now, Joe. Thank you very much for popping in and giving us your presentation today. I love listening to you, and frankly, I think everybody who watched the show today, including myself, probably learned a really interesting perspective on how to build positions and a way to take advantage of the rest of the public and have it work to your advantage. So thank you for that, Joe.
Mm-hmm.
Thanks to our panelists. You guys were all very patient and helpful through the show today. Thank you very much for popping in, Julian, Tim. I guess we lost a couple other people that were in. Jesse, thank you very much. I'll thank everybody out on YouTube for giving their support. By all means, if you have a chance, Joe, do you have a website running now?
No, I don't.
All right. Well, you can always get Joe the Chasm at TradingView and pick his brain. You can always get me, CRInvestor at TradingView as well. Feel free, if you'd like, to visit the website, my website. Keep in mind we're revamping this whole thing relatively shortly. So take advantage of the free resources while they last, because they won't be around for long. Anyway, therationalinvestor.ca. If
Did we lose him?
And you feel like to the Bitcoin fund, I'm up actually well over full Bitcoin now, and of course, based on my posts here on my Twitter feed through TradingView, you'll all know now I'm just sitting in cash waiting for lower prices. So that fund is actually going very well. I'm very pleased with that. Thank you very much to the public, and your continued support helps me get step by step closer to changing Liam and my lives forever. So thank you again. I hope you all enjoyed the show. I hope to see you guys again next week for doesn't really matter, Jesse. I think the Bitcoin's probably easier, but if you want to do the Litecoin route, I do have the link on the page. I haven't actually had anybody make a Litecoin donation, so you'd be breaking my proverbial cherry, wouldn't you? Anyway, thanks again for everybody. Thank you, YouTube. Thank you, Lord. Thank you, Jojo, for helping me as much as you do. And all the best to everybody. God bless. Have a great week trading, and I hope you all have utmost success. Thank you, Joe, and you have a good night too.
Okay, good night.